Hi everyone and welcome to today's Morning Report on Thursday the 16th of June with me, Richard Perry, market analyst at Antic Markets. We've had the Fed meeting overnight and it was a dovish meeting, dovish sort of lean from the Fed. The dot plots were reduced. It was interesting that having moved from only one Fed member expecting one rate hike in 2016. Now there are as many as 6, so they've all pretty much downgraded their expectations of rate hikes in this year. And not only that, they cut the growth expectations as well slightly for 2016, 2017. So it, generally speaking, wasn't a great one for the bulls of the dollar, and subsequently we've seen some dollar weakness coming through the markets. And sorry, I don't know where that's disappeared to. There it is. Get that in the middle. 2-year Treasury yields below the lows of April and May now. And look at the 10-year. 10-year is testing that February low. So really, really strong moves on these Treasuries. Obviously, investors pushing back into Treasuries. Not only that, you've got pretty much safe haven trades around the markets are doing much better. You've got the yen strengthening, huge yen strength on the back of not only the Fed but also the Bank of Japan not moving on rates. 2% gains on the yen, down below 104 on dollar yen. So I'll talk about that in my chart analysis. But not only that, you're seeing the oil price continuing to slide. That's on not only sort of concerns about Brexit, but also now seemingly the Fed is sort of downgrading its expectations of growth as well. So that sort of plays in that whole sort of argument, isn't it? And we're seeing, just generally speaking, just concerns for anything growth orientated, really. And safe havens are sort of benefiting on the back of that. We've seen a big breakout on gold today. I'll talk about that in my gold analysis video. But really strong moves we are seeing. Equity markets under pressure again. Fed induced a little bit of a pullback on Wall Street yesterday, but strong sell-off on Asian markets overnight. Nikkei down 3%, and European markets are not too bad considering, but about 0.5% to sort of 0.75% lower on the European indices today. Now, it doesn't stop there, because we also have lots of data out today again. We start off at 9:30 with the UK data. The retail sales expected to come slightly lower to 3.8% year on year for the ex-fuel retail sales, but still I think that's fairly positive. So that would be that could be helping to support the sterling again. Sterling, to be honest, is being driven once more probably by, or now the Fed's out of the way, Brexit is the full steam ahead argument on sterling, and sterling's back lower again by about 35-40 ticks. Then at 12 o'clock we've then got the Bank of England giving its monetary policy update. No change expected for the Bank of England monetary policy, but also no change expected on the voting as well. 9:00 is the expectation there. Then into the afternoon we've got CPI for the US. Now on the headline data, it's expected to stay at 1.1% for the year, but increase slightly on the core to 2.2%. But that's sort of in line with would be in line with the thinking of the Fed, which just slightly upgraded its inflation data for 2016 on the core PCE yesterday. But core CPI is expected to just tick slightly higher. Then weekly jobless claims expected to come in at 270, so basically in line with what we've been seeing in the last few weeks. And the National Association of Home Buyers and Housing Market Index is expected to tick slightly higher to 59. But that takes me on to my chart today, which is the Aussie Dollar. Now we've seen a lot of a bit of a slide on the Aussie Dollar in the last few days. Ticked higher yesterday on what looked like an improved risk appetite outlook. The Aussie benefiting on the back of that, and actually this candle that we posted yesterday was actually pushed above 3 days of declines really. But then today it's that back lower again. You've had employment data out from the Australia, not too bad, pretty much sort of very slightly better than expected, although broadly in line with expectations, but it hasn't helped to stabilise the Aussie today, which has fallen back again. Now what we're seeing is 73.85. I think is the key level, because I think I'll show you on the hourly chart, which 73.85 is again, even in the last few days, has become pivotal. Resistance on the 6th and 7th turned into an element of support on Tuesday. It became turned into resistance on Tuesday, and then supportive again yesterday. Then bang! It in the opening sort of European hour, we had significant selling pressure coming through. So we've broken back below that. So that becomes a basis of resistance again. But this support at 73.27 that we posted on Tuesday, that has become your near-term key support, because it's fairly choppy actually near-term, and I think it's sort of trying to figure out exactly where to go next. Because you look at the MACD lines on the hourly, you actually say that although they are correcting back, they're actually not too bad because they're above positive. So if they can sort of settle above positive, and this marginal sort of up sort of recovery candle that we have had in the past hour sort of continues to remain in place as the support above 73.27, then you could see the sort of beginnings of or sort of the stabilisation continuing, following on from this recent sort of minor correction. But I think that 73.85 level is key for Aussie dollar, and I think you need to continue to watch out for that being the main driver. So with the momentum indicators on the daily chart reasonably neutral. Yes, the RSI has just ticked down again, but I think it's obviously playing out for. I mean, that's obviously a moving indicator at the moment in terms of the today's move, which is just back to about around 50. But the stochastics are sort of broadly flat, but slightly positive. MACD lines are flattening off at neutral. So it is an outlook for the Aussie that is still trying to find its way, and I think that support at 73.27, which was Tuesday's low, I think is key for the Aussie, because if you break that, you sort of could be sort of falling quite quickly back towards the lows again. So I wish you good luck in your trading today, and I'll speak to you soon. Thank you.